Hey everyone, welcome. I'd like to talk to you today about the general real estate market and what's going on. Low inventory is sort of the basic theme. Low inventory, obviously, and then very high rates. Um, as we go through this, I want you guys to know that sort of the main factor being that there are just so few homes on the market. In the seven counties of the San Francisco and San Jose metro area, in the past 12 months, inventory has dropped 32% from the previous 12-month period. So there's 22,000 fewer properties for sale, along with a lot of buyer demand that's still coming, and sellers that just don't want to sell because they've gotten into such a low interest rate that they don't want to leave their property. You're going to still see very similar spikes and valleys in the real estate market. As you may or may not know, usually the spring market and fall market, there's a lot more inventory and therefore a lot more volume. And then it sort of slows down in the summer months and the winter months during the holidays. So let's start with active listings on the market. This is a long-term chart showing, the last 6 years or so. You'll see a cycle, goes up in the spring, goes down, goes up towards the fall, goes down, up in the spring, et cetera, et cetera. Right now, they are at some of the lowest levels for the time. We did have a spring market, but it did not go up to nearly the level that it has from an inventory perspective. Here we're showing the monthly sales volume. Again, similar trend in June of 2021, which some may say is the peak of the market, although I think May 2022 was the peak of the market, but there was less for sale. Um, we're seeing a lot less homes for sale. I mean, just absolute huge difference as far as San Mateo County homes selling and therefore the volume. Here, this is a really interesting chart because it shows the difference between the homes that are selling and the homes that are being listed and whether or not there's a gap. If you look at the market crash in '08, there's a huge gap between homes being listed and then the actual sales volume. As we get to the recovery, that gap narrows and it stayed narrow all throughout, even post the interest rate and the new housing recovery, which is happening now. There's still a very narrow gap showing that inventory is very low compared to the number of buyers that need to buy, and it is not really adjusting as far as the prices going down as much as people thought, given the new affordability and the new purchasing power by the buyers. Here's a 3-month rolling average of home price trends, which, during the recovery went up again in cycles, goes up, goes down, goes up, goes down. The peak was 2022, where the median home price peaked over 2.2 million, and then once the interest rates ballooned from 3% to 7%, it took a big hit. But since December, which we all believe was the bottom of the market, it has taken a good recovery, bringing us now to just over 2 million. And now we're just looking at just average for the year, sorry, the median for the year, took a big spike during the post-pandemic boom and sort of leveled out in 2022 and has taken a bit of a step back now, in 2023, to 1.950 for a year to date. So home prices have actually stood the test of the interest rate, increasing at a rapid level due to inventory levels just being so low. Another thing that I think is a strength for the current people living in our area is that the unemployment is very low, especially for San Mateo County. I mean, San Mateo County is the lowest of the 6 counties. So here it shows we're in a strong economic position, and I don't see that changing relative to the rest of the country. Here is an interesting chart because it shows the forecast from three different, experts, quote unquote, showing that they think that between Q1 24 and Q4 of 2024, interest rates are going to go below 6% and then even go below 5% towards the end of next year. Once this begins to happen, we believe that there's going to be a much larger number of buyers coming in and wanting to buy. Um, I tell a lot of our clients now, hey, listen, we know it's tough, but if you can afford it and if it's time to move and you find a home that you like and you're able to pay these payments, it's worth getting in and then refinancing once the rates go below 5%. Because if you don't, then everyone's going to be buying when it's at 5% and the prices will go up. Unless inventory changes, the prices will go up. And even when inventory changes, from a cyclical perspective, the more inventory we have in the fall and the more inventory we have in the spring is when more buyers come out and it becomes a much more of a multiple offer situation, driving the prices even higher. In this case, There are so many people waiting at the doorstep to jump into the market that just don't like the interest rates being so high that once that happens, they will buy in and it will be very, very busy and very, very competitive. So if you do see a house and you are in a position that you're ready to buy now, I think it's probably a good idea to at least have the discussion and see if it makes sense because we're expecting there to be an extremely busy second half of 2024 and a very, very busy 2025. I hope this was helpful. I know we're throwing a lot of information at you all at once, but we're happy to hop on a phone call or discuss this further. I plan on calling you in a few days just to see if you received the video and see if you have any questions. And if there's anybody else that you'd like to share this with, please do. It really helps us a lot for you guys to share our information and for you to refer us. We'll talk to you soon. Have a good one. Bye bye.